I always have my eyes open for good dividend stocks that are temporarily down on their luck. And believe me, current market conditions are providing many excellent candidates, whether that excites you or not. I'm Jonathan, and we're going to look at a great company. I'm talking Mr. Olympia kind of strong, with a great potential buying opportunity on today's edition of Constant Cash Flow. Texas Instruments Incorporated, ticker symbol TXN, is on the dip over the last month and has moved onto my radar. While you may not see TXN being discussed in many value circles, an opportunity should be recognized when it presents itself, so make sure to stick around. This stock not only shows rock-solid fundamentals, financials, and growth, but also a rapidly, consistently rising dividend that we'll showcase at the end. You probably already know what Texas Instruments does, but for those that don't, here it is straight from the horse's mouth. According to their website, they design, manufacture, test, and sell analog and embedded semiconductors that help the nearly 100,000 customers around the globe create differentiated applications in markets that include industrial, automotive, personal electronics, communications equipment, and enterprise systems. The bottom line is that they're the world's largest maker of analog chips, which is impressive considering the competition in this sector. Divided into three segments, TXN gets about 75% of its revenue from those analog operations. These are necessary for all electronic devices to facilitate user interaction. Revenue in 2020 was divided up as follows: 37% to industrial, 27% to personal electronics, 20% to automotive, 8% to communications equipment, and 6% to enterprise systems. TXN makes computer chips that you likely rely on every single day, whether you realize it or not. As most everyone knows by now, there's a massive global chip shortage, and some are blaming TXN for it. Just because it's based in Dallas, though, doesn't mean that TXN's the evil J.R. Ewing of the chip world. There are a lot of reasons for the global chip shortage throughout 2021, and all of the world's supply chain problems can't be laid at Texas Instruments' doorstep. If we look at their performance over the past year, it's understandably lagged the market, given the previously discussed shortages, with a total return of 9.96% versus the S&P's total return of 24.03%. It's been said many times before, but time in the market beats timing the market. But what if you could do both? If we widen our view and look at the 5-year performance of TXN, it beats the S&P 500 by a pretty significant margin. 179% to 124%. And if we get the Eagle's Eye 10-year view, it's absolutely destroyed the S&P 500, almost doubling up the returns 673% to 341%. Looking at TXN's income statements, we can see some very promising information. Revenues are up year over year significantly, even throughout 2021. Showing their ability to navigate complicated global supply situations and continue to grow. Revenue per share and gross profits are also up significantly. EPS, or earnings per share, have spiked as well. 5 years ago, they had an EPS of $3.48, and today they sit at a trailing 12 months EPS of $7.90. Outstanding shares are constantly on a downward trend to the tune of almost 10% since 2016, increasing shareholders' value on the shares that they already hold. Future stock buybacks could have been deterred by the recently failed spending bill because it included a tax on them. So buybacks surged in the second half of 2021, most likely with an eye on getting them in before that expected tax penalty went into effect. Since that bill now appears dead, or at least on life support, that's good news for shareholders in companies like TXN that traditionally do a lot of buybacks. But it's something to keep an eye on as we move throughout the year. Moving on to their balance sheet, we can see that they have $23 billion in total assets and are holding $5.6 billion in cash. Their current liabilities are $2.4 billion with an additional $7.2 billion in long-term debt. These financial results show a healthy company on a long-term upward trajectory. Even the results during the 20 to 21 pandemic stress test were better in most areas than the previous year. Whenever debt comes up, I like to defer to the credit rating agencies. It's their job to analyze a company's debt load, and most importantly, their opinion matters. As you might expect from the numbers we saw, they're positive on Texas Instruments. Fitch Rating has TXN at an A+, Morningstar Credit has it an AA-, and, well, you get the idea. TXN is, as they say, good for it. This conveys a wide variety of advantages, such as better loan terms, not that the company borrows much, more favorable terms with suppliers, and so on. I know what some of you are probably thinking. Jonathan, it's a chip stock. Those are notoriously volatile. Well, the chip industry indeed has its ups and downs. It's a volatile commodity business that goes through regular cycles like any other industry. However, TXN currently has a beta, which is a measure of volatility, under 1.0. It's 0.92 as of the making of this video. What that means is that this stock tends to be less volatile than the market as a whole. Since TXN is also a tech stock, you might think that it doesn't pay a dividend worth mentioning. But, to the contrary, TXN's dividend is one of the stock's best selling points, and I probably wouldn't be talking about it here if that wasn't the case. Boasting a 2.5% forward dividend yield, it beats out many beloved dividend stocks, and boasts a 20.75% 5-year dividend growth rate, making it absolutely perfect for dividend growth investors. It features a good payout ratio of 57% and has increased its dividend for 16 consecutive years, further showing its stability for dividend investors. If you accept that the world is transitioning to electric vehicles, the temporary failure of the U.S. political machine to advance the green push in its latest bill should be seen only as a temporary roadblock. For this reason and the company's financials, coupled with a solid, dependable, and rapidly rising dividend, TXN stock looks like a buy on pullbacks like the one we see right now. In the end, nothing's assured. Even if you believe in the transition to the green economy wholeheartedly, there will undoubtedly be many more stumbling blocks along the way. So there may be better buying opportunities in the future for TXN. Nobody can really say 100%. I don't try to pick bottoms, I just try to point out good values that, yes, could become better ones if that's what the market gods decide. Thank you so much for hanging out with me until the end. If you found this video helpful in any way, I would greatly appreciate it if you pop that like button and subscribed. See you next time.